Hello traders. Nifty started the week with a strong positive note. On the very first day of trading week, Nifty showed a significant rally of 160 points after the USD 1 trillion European Union bailout package triggered rally in the Asian and European markets. But on the next trading day of the week, Nifty pared some of its previous gains in the early hours of trade due to lower than expected IIP number outcomes. For the rest of the week, Nifty remained volatile and choppy, but on the very last day, Nifty fell sharply due to the lower than expected job data report in the US, which triggered selling in the global market, including in India. Technically, Nifty in the last 6-day chart has formed a inverted W shape with support at 5,000. Momentum indicators MACD is showing negative divergence. RSI and stochastic is also showing negative trend of the Nifty, and all momentum indicators are currently hovering in the deep oversold zone. We are expecting Nifty to touch 5,000 mark in the next week. Technically, market is negative, but it is resting on the strong support and can bounce from here if it has to, and otherwise it can even slide down to the levels of 4900 to 4850 levels. There is strong possibility that we may see some more slide with a temporary pullback near the 5,000 mark. The support for the Nifty is 5,000 to 4950 and strong resistance at 5200. Now some stocks which the traders must keep watch for the next week are first is Sesagoa. The stock has been on a downtrend since the peak of 495 witnessed during the second week of April 2010. This week we saw the stock breaking below the 100-day DMA. In the medium term, every pullback is likely to face resistance at 412. Traders are advised to short between the levels of 370 to 380 with a stop loss placed at 395 for the target of 345 to 340 levels. Second stock is Tata Steel. On Friday, the stock fell below its 200 DMA, and we don't expect the recent peak to be tested in near future anytime soon. In fact, technical indicators suggested more downside from the current levels. Based on the above technical observations, we recommend traders to sell this stock in the range of 543 to 553 with a stop loss of 567 for the target of 520 to 510. Now my friend will continue with commodities for the next week.
Good morning. First of all, we will talk about gold. Gold ended flat on Friday after an early rally to record highs fizzled, but the metal posted its fourth straight weekly increase as jittery investors fretted that a $1 trillion European reserve could be too late to contain debt contagion. COMEX gold is strong on charts and is sustaining about $1,200 an ounce. Last week, COMEX gold broke its all-time high and made a new high of $1,250 an ounce, but didn't sustain near it. In the coming week, $1,250 an ounce will be a major psychological resistance in gold. If COMEX gold does not sustain above $1,250 an ounce, then it can come slightly downward and could come near $1,200 to $1,180 an ounce. And below $1,180 an ounce can make further downward rally. For the next week, traders can use a sell on higher level strategy if COMEX gold sustains below $1,200 an ounce by keeping the strict stop losses. Major support for COMEX gold in the coming week would be $1,175 and $1,150. Major resistance for COMEX gold in the coming week would be $1,250 and $1,270, and major support in MCX gold is $17,600 and $17,280, and major resistance in MCX gold is $18,400 and $18,660. Now let's talk about copper. Metals prices fell on Friday, with copper pairing about half of the previous session's rally as investors continued to fret about the economic health of the Eurozone and China's growth profile. US copper futures settled at a one-week low on Friday, under pressure from a firm dollar and fears that new measures in the European and potential physical tightening in China could slow an already fragile economic recovery. Copper is weak on charts and it is not able to sustain at higher levels. For the coming week, 300 level can act as a good support for COMEX copper. If it breaks this level and sustains below it, we can see copper near 286 level. Copper is still bearish, and for the next week, one should use the strategy of sell on higher levels. For the next week, COMEX copper has important support of 300 and 275 and resistance of 332 and 356. MCX copper has support at 290 and 277 and resistance at 330 and 348. Thank you.